You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast. All right, everyone, welcome back to yet another episode. Hamish Hodder, what's cracking, my friend?
Oh, not too much. I didn't sleep very well. I was telling you just before last night. I had one of those nights where I just was waking up every hour. So I've had 2 coffees this morning, which usually I wait until about, like 11 to have my second coffee. So I've had 2 straight away, and
bang, bang.
Hopefully hopefully I've got some energy this podcast. But we've got quite a lot to talk about, quite a lot of interesting stories to talk about because we're right in the thick of earnings season. And I think this is like kind of my favorite week, I'm going to be honest. Meta and Google, 2 advertising beasts related to our businesses and our YouTube channels and that sort of thing. So it's always fascinating to kind of see from a personal level, but also for you guys, what happens with those companies. So this is always a good week.
No, I like talking about the advertising giants. It is very, very relevant to what we talk about. It's like slots right into our circle of competence. It's just, it's always a good week. And I think you guys like it as well. So always a good podcast when we get to talk about Meta and Google earnings. We got some follow-ups from from last week. You know, we were talking about, I think literally, because we record this on a Thursday, so it comes out on Friday night or Saturday, our time usually. And we were talking, I think one of the lines in the last podcast was, geez, I wonder how long Liz Truss is going to last. Well, that changed before the podcast actually went out. So we'd recorded it, but it hadn't gone out yet. So by the time we recorded it, by the time we released it, it was already out of date. So
crazy.
Rishi Sunak is now the Prime Minister. Is it Prime? Yeah, it's Prime Minister.
Prime Minister. Did you see that live stream of the lettuce? Do you see that? So someone...
the lettuce?
So, this is great that you haven't seen this. So someone obviously had... clearly there was a bit of a lack of confidence in her staying around as Prime Minister. So someone set up a lettuce on a live stream on YouTube. And it was like a lettuce versus Liz. Who's going to last longer? Like, will the lettuce die? Or will she be kicked out? And the lettuce won.
Go the lettuce.
Go. That's not great. You can't even outlast the a lettuce. But... yeah, that was kind of a fun thing that someone put together.
I'd never heard of Rishi Sunak before, and man, I was just like, I just looked at a photo and I was like, he looks like a nice, well put together guy. And then I listened to him give a speech. Oh my God, if I could just if I could boil down, what do you think a politician sounds like? Here's exactly what a politician sounds like, which I guess is fitting. But he's like, together, we will work to secure the future of our nation and create hope. It's like, oh my God, dude.
It's so bad. I just wish.
I think if I was the Prime Minister of Australia, I think that I would, maybe this is a terrible idea, but I think I would go in with no scripts, no scripted speeches. I'd just be like, front of the media, I'd just be like, hey guys, how's it going? Here to answer questions. What are your questions about? Yep. And, I think it's because they just don't want to be caught out being like, they don't want to be caught out not knowing, not being able to but I think there's such a power in, it's such a truthful, honesty and trustworthiness to be able to say things like, I don't actually know the answer to your question, but if you leave it with me, I'll follow up with my team and we'll make sure we get an answer to you on that one.
Yeah.
That to me is just so much more trustworthy.
There's just so much scrutiny on kind of every word that they say that I think so many of them are just every word is perfectly placed so they don't make a mistake. Like they're thinking about every word before it comes out of their mouth. And it sounds ridiculous because it is. Nobody talks like that. But it is kind of weird because they are being judged for every word, even though that shouldn't be the case. If you slip up and say something and you're like, oh, sorry, I actually meant this. In a normal conversation, people are like, you've just slipped up because you're a human being and you're not thinking about every bloody sentence before it comes out of your mouth. But with the politicians, they're like, and I guess they're getting criticized for it.
And I guess a lot of the if they slip up, it gets printed on like all
it's like
the
a quote.
newspapers and stuff.
Exactly.
It's like gets quoted and stuff like that unfairly a lot of the time, but that's
all
just
the
what
time.
happens.
Yeah,
But,
exactly. Can't be as bad as he can't sound as bad as Kanye this week though. Kanye is I honestly I feel bad watching him. I watched what did I watch? I watched a bit of a Piers Morgan interview because he's been doing a couple of interviews, and like that man is not well. Like not Piers Morgan, Kanye is not well. Like he should not
Both
be.
of them.
Well, yeah, but yeah, I mean, it's kind of sad because obviously he just has a ton of money. He's very famous, so no one can really tell him no. Whereas I think in most situations, I think if someone was kind of in his state, they probably would have people around him telling him not to do that, not go public in the way he is. But yeah, he's a bit of a disaster.
He's fallen off the rails a little bit.
Yeah,
which is sad because he built such a great name for himself.
Yeah,
you know, through his art and through his music.
Yeah,
and to just now that it's come out, I mean, yeah, it's just I can't get around that. That's very sad. Kanye, you've done some silly things, and quite rightly. I mean, you know, do the crime, do the time, or whatever the saying is. So, yeah, absolutely.
Yeah.
I don't think hate speech is acceptable in any format ever. So I think that there should be some punishment. But I actually read. I just think that it's sad that he built this. He built all these businesses and he has great art, and a lot of people respect his music and that sort of thing, and like his music.
Yeah,
but,
I'm not saying it's sad that it's happening to him in that like versus what he's saying, which is clearly anti-Semitic. I mean, it's sad the situation of what's happening. I guess. But some of the stuff he's. I mean, I haven't been following it too closely, but yeah, I mean, bit of a disaster.
In terms of the, I wanted to put this in real quick, not because of the controversy, but because of the finance, the sponsorship deals related to it. Forbes estimates that his net worth has dropped to $400 million from over $2 billion, just on the back of losing all of these contracts. So. I mean, $400 million, he's doing fine, but still, crazy. I don't think I'd like it if I had $2 billion in the bank and then all of a sudden the next day I had like $400 million.
Yikes.
It's like, man, should have kept my thoughts to myself on that one, shouldn't I?
Not said that. Oh boy.
Anyway, but yeah. There's I don't know if you've seen it, the quote, he was on some like hip hop podcast like a week or two ago, and a direct quote from that podcast was, "The funny thing is I could literally say anti-Semitic things and Adidas wouldn't drop me." That was a direct quote from Kanye.
It's not great.
That one didn't age well, did it?
No.
Well, Adidas did drop you, and now you are copping the consequences. So, but yeah,
there you go. Did you see?
Not a great situation all around.
You see Musk going into the Twitter headquarters with a sink, holding a sink.
Yeah, I saw that. How funny is that? I think the first part of this podcast now is just is going to be recapping pop culture.
Yes.
For we'll move on to the stock market news and the boring and the finance and the investing. But we're going to go through all the funny memes and stuff at the start. Rishi Sunak, Elon Musk. That was hilarious. Explain it if people haven't heard it. You better explain.
Yeah.
It
So people just filmed him walking into the HQ. I guess maybe for the first time, or at least maybe not for the first time, but he was carrying like a sink, like a basin, as in copying that meme, like let that sink in. That stupid meme where there's just the door and the sink behind the door. So stupid. Yeah. I mean, it's hilarious, but it's also like he's having a little bit too much fun for someone who just announced they're going to lay off 80% of Twitter's workforce. Like 5,000 people are losing their jobs at some point soon. So I don't know. Like he's having a bit too much fun for someone in that position, but I don't know. I guess it just is what it is. I don't know.
Yeah. Yes, but he is the memester. He is the meme lord, the techno king, as they call him. But anyway, with all that said, that's all the pop culture kind of stuff going on. We should probably talk about the
one more
actual stock market.
There's one more in pop culture. Sharesight is sponsoring today's episode. That's news this week.
Oh,
yeah. So
tell me about that.
Yeah. So Sharesight is an application you can use to track the performance of your stock portfolio. So you can bring in all of your trades either automatically by connecting your brokers, or you can use Excel or add them in one by one. And once you do, it will track all the gains and losses in your portfolio. So capital gains, dividends. If you have dividend reinvestment plans, it will do those calculations for you. Currency gains if you're buying shares internationally or you hold foreign currencies. And then you can also use it for when it comes to tax time. So Sharesight generates up to 12 different reports that can be used to track the performance of your portfolio, the diversity, things like that, as well as at tax time to work out things such as capital gains, dividend income, and more. At the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. So use that link, sign up to a free plan, track up to 10 holdings for as long as you want. Or you can also use that link to sign up to a premium plan if you want for more features and more reporting, and you'll get 4 months off a yearly subscription if you use our link. And as always, if you do use that link when you're signing up, you'll be supporting the podcast. So thank you very much to those people who have done so over the past, 3-4 years that we've been doing this podcast now. 3 years.
Absolutely.
I don't know.
Yeah. It's been a while.
It has been a 200 episodes.
All right, should I, 200, over 200 episodes. It's pretty impressive. It's kind of crazy. We're just in our groove now. We just know Thursday morning, wake up, record the podcast. Yeah, it's
in the
good.
rhythm.
All right, should I go through Google earnings first?
Yes, take us through Google, and then we'll do some sideways comparison to Meta, see how the two businesses are doing.
All right, revenue 69. It was actually, I didn't even look up what the stock did. I'm going to look that
tanked,
up.
I think.
Stock. Did it? Alphabet.
I think it tanked. I mean, it didn't tank as bad as Meta, I don't think. We'll get to Meta.
Meta. It did actually. Yeah. It did. It tanked 7.5%. Now it's initially 7.5%. Now it's down 9%. So yeah. Okay. Wow.
Yeah.
10% cheaper. All right. No worries. So anyway, let's talk about the numbers. Revenue came in at 69 billion for Alphabet, which was only up 6% year over year. Operating income was 17 billion, and that was quite a bit worse than Q3 2021. Which was 21 billion. So they've dropped year over year from 21 billion down to 17 billion of operating income. So Google achieved a 25% operating margin last quarter, which is down from 32% from Q3 2021. I thought that was quite a substantial drop for, a predominantly software-based business.
Yeah.
I mean, we were talking about just last week that Tesla achieved a 17.2% operating margin. So 17.2. I mean, it's this. Yeah, they're big businesses. It's still a long way away from 25%. But it's not. It's pretty crazy as a comparison. A car maker 17.2 versus like Google, a software company. 25.
Yeah, that I feel like that's been a definite. A lot of people have been kind of like, oh, this is a software business versus a physical business. That kind of doesn't. It's not like a perfect comparison because I mean, take Google. I mean, they have a lot of fixed advertising costs, even though they're a software business. Like every time they take a new dollar on YouTube, they have a fixed, 55% that goes to the creators. That's a fixed cost.
That's a good point.
Right? Even though they're a software business, it's a fixed cost. And the same thing applies for their network marketing, network advertising, and a bunch of other aspects of their business where as they scale revenue, their costs are scaling at the same rate. So yeah, it is kind of a redundant comparison, I think, anymore to be like, this is a physical business that sells physical products that has fixed physical costs. Well, digital businesses can also have fixed costs. And I guess technically YouTube can change. They have the ability to reduce that deal at some point, but it's still definitely a fixed cost. In fact, they don't even get the scale efficiencies, right? Like, for businesses selling physical products, as they scale, their costs are fixed, but as a percentage of revenue, they probably will go down as they buy their goods in more, their materials in more bulk. They don't get that with YouTube ads, for example. So
that's a good point. I hadn't thought about that too much, but that does make sense. All right, let's. So moving on from operating to net. So net income came in at 13.9 billion, which was down from 18.9 billion in Q3 of last year. So year over year, starting to quite substantially lower. To be perfectly frank. In terms of, so we'll go through revenue line by line because that's always quite interesting. They got quite a few different kind of facets to their total revenue number. So Google Search, which is the big behemoth, that rose 4.25% year over year in terms of revenue. YouTube ads fell 1.86%, and Google Network, which is all the other third parties that use their advertising network, fell 1.9% year over year. So those three together is Google advertising. So overall, Google advertising rose 2.54%. So you can see how much Google search carries that. So rose 2.54% to $54.5 billion. So 79% of their revenue was from advertising. Then beyond that, Google Other rose 2%. That's Android, Play Store, Chrome, hardware, so phones, their Wi-Fi routers, their speakers. Also includes Google Maps, the revenue they generate from having the best mapping system in the world. Then on top of that, so that's Google Other. Then on top of that, they've got Cloud. So Cloud revenue rose 37.64% year over year, which is very impressive, but still only accounts for $6.8 billion of revenue in the quarter. And that was of their $69 billion of quarterly revenue, so it's still a small chunk. And Other Bets rose 14.84%, but that's so tiny it doesn't even matter. But that's revenue. If we look at operating results, Google services declined from $23.9 billion to $19.7 billion. Then Google Cloud went from negative $644 million to negative $699 million. So still negatives and getting a little bit worse in terms of Google Cloud. And then Other Bets went from negative 1.3 to negative 1.6. So operating results, they actually had worse operating results in all three areas.
Yeah.
Which is interesting.
I would
$23.9 billion to $19.7 billion for Google services. That's it's not insignificant.
Yeah, I would imagine they're probably feeling the pinch of a lot of businesses like we spoke about. I think Netflix either last week or the week before, where they're collecting a lot of revenue in foreign currencies and maybe their expenses are in US dollars. So the FX is having somewhat of a negative effect. I know Meta, that we'll talk about, had some of that. And then just, I guess you'll kind of take us through maybe some of the specific numbers in terms of clicks and cost of click and that sort of thing.
They did note just on that, they didn't really talk about like how much it's affecting each kind of area with the whole foreign currency, but they did say revenue growth was 6% year over year. It would have been 11% on a constant currency basis. Okay. So there's still a significant impact of the foreign exchange rates at the moment. Okay, where was I? So at a basic level, numbers were down, as we said. Currency was a big factor. They also did say that their results this quarter was a result of lapping last year's period of elevated growth. So I was like, oh, okay. But then I was like, is that true? So I looked at Q3 that we've just had versus Q2, and revenue's flat versus Q2. Operating income was down in Q3 versus Q2 from 19 billion to 17 billion. Net income was 16 billion and now it's 14. So I don't know if I buy that they're just lapping a high growth period, considering like quarter over quarter results still aren't that impressive. So
I feel like it'd be probably more accurate to say that 2020, 2021 was so absurdly high, and that was kind of a huge benefit through the stay-at-home orders and that sort of thing. And now businesses are experiencing higher costs. They're looking to cut marketing budgets. So it's probably a combination of both of a tough comparison to a really good period, and we're not in the greatest environment for businesses to be throwing money at advertising. Yeah,
and I'll take you through some more of the specifics of advertising. So this is what we like to dig into. These are the numbers we like to look at. So there was an 8% rise in paid clicks. There was a 5% reduction in cost per click. So more clicks, they noted, due to increased search volume, and reduced costs due to device and geographic mix and foreign exchange. Interestingly, they note, this is something that confused me. See if you can figure this out and help me out here. They note that one of the reasons for the rise in paid clicks was growth in advertiser spending. But they also note that advertiser spending was a contributing factor to the reduction in cost per click. So I think that's a little bit contradictory. They're basically saying that, oh yeah, we're getting more paid clicks because advertisers are spending more, and then they're essentially saying, oh, the cost per click is going down because advertisers are spending less.
Yeah, and I guess that sounds absolutely absurd. But yeah, they really didn't need to say that. I think it makes what you said before, which was the reduction is due to a change in the mix of device and geography. That makes more sense. That there could be more clicks, but if there's more advertisements being run on mobile versus desktop, for example, those clicks cost less. So I guess you could. I guess it just sounds absurd though. It does. It sounds ridiculous that the advertiser spending could have an effect on positive and the negative side. But interesting.
But anyway, that's what they said. Yeah. Overall, 3% increase in impressions and a 5% reduction in cost per impression.
Right.
So kind of similar story there.
I'd be curious to see how much of an effect YouTube Shorts is having on this, because YouTube's revenue was down, and I would imagine that part of maybe their increased impressions is, at least in YouTube, is being driven by the increased use of Shorts, maybe relative to traditional YouTube videos, which probably advertise at a higher rate. So it would be interesting to see. They're obviously not going to give us that level of detail, but it would be interesting to see how are people spending their time on YouTube? Are they spending quite a large chunk now in Shorts versus just before Shorts existed, it was all YouTube content. And, maybe there's even more people on the platform now because people are spending less time on TikTok and that sort of thing. That would be kind of the detail that I would be interested in seeing, but we're never going to see that. So
no,
we could only
They
dream.
did note that they did give some statistics. They didn't do the comparison though. They noted on the earnings call. I'm only halfway through the earnings call, by the way. So if I haven't hit the Q&A yet. Revenue sharing on Shorts starting next year. Yep, we knew about that. Ads have already launched on Shorts. Obviously, the Shorts are a big focus going forward. They did note that they're up to 1.5 billion users per month on Shorts and 30 billion daily views on Shorts. And I looked, it's not from an official source, but I was researching and it showed that last quarter TikTok had just over 1 billion monthly users. But I don't think there's a reliable source on how many daily views TikTok gets.
I don't think so. And even that monthly active users, I've been seeing that 1 billion monthly active users for I think at least 18 months. And I don't think I'm not sure if they publicly release it or if it's an estimate or where this figure is coming from, but I would be very surprised if it had been flat for 18 months. Maybe it has. Maybe the effect of Shorts and Reels has slowed their growth to nothing, but for them to grow from like 100 million monthly active users to 1 billion in a couple of years and then to just not grow it full stop would be surprising to me. So I'm not sure if there's like up-to-date data on that, but yeah, YouTube being at 1.5 billion, it's kind of the same effect as Instagram, that they can just bring their audience to the same kind of style of short-form content immediately, and people just gravitate to it because they already have the YouTube app and they already spend a lot of time on YouTube.
Yeah. They also noted in terms of TV, I was going to ask, because you keep up to date with this with Netflix in particular. Yeah. They noted on their conference call, YouTube was the leader in streaming TV viewership in the US in September for the first time, according to Nielsen data. Is that true?
Yeah. So I think we looked at this maybe last week. So they in the US, they grab 8% of total viewing time, and then Netflix was about 7.3. The one thing to keep in mind in there is that YouTube is including their YouTube Live, which is, YouTube TV, which is their subscription to the cable channels. So they've got this really great product, which is a very natural progression of, if you have a cable subscription, instead of having to physically plug in a thing and you have one kind of setup for cable, you can just subscribe to YouTube TV, get all the cable channels, in the US you can at least, and you just watch them streaming on any of your devices at any time. If you actually remove that, their share is 6.9%, so they're not the largest if you exclude their cable subscription. But with their cable subscription, they're the biggest. So yeah,
interesting.
It is interesting.
Yeah, so they definitely they said that for YouTube, their focus is on TV and on Shorts, which I thought was interesting. What else did I note from the conference call? There's a Pixel tablet coming in 2023. They had their highest selling week ever for Pixel recently with the release of their new phones. Actually, I have one. I have the Pixel 7. I just got the standard Pixel 7. Yeah, it's good. I really like it so far. Yeah, very handy. I'm coming from like a very old phone now. Actually, it was an old Pixel, but I stopped updating it because it's just every update I got, the battery would get worse. Yeah. So I've gotten this new, and I was just playing around, and this is actually something they talked about in the conference call, that how they're focusing on AI to improve the search experience, but they're also focusing on Google Lens. Do you have a Google phone?
No, I have a Samsung.
Do you have Google Lens?
I have Samsung.
No, Google Lens,
garbage
man.
AI.
Oh, I was using Google Lens. It's so good, dude. I was pointing it, like I'd take a photo of my mouse and it'd just be like, this is an MX Master 3. You can buy it here and it costs this much. Actually, this is the best deal. This so
Samsung
good.
must have Google Lens because it's all AI, so it's still Android. It must be on here.
Right.
I don't use it though.
Actually, that's true. It's Android. Yeah.
Because I remember I used to have Pixel phones and I used to go through and check out all the features and that sort of thing. And yeah, it is. I remember even back then it was very good. Just to kind of take photos of things and quickly find them.
It was so crazy. Like JJ over there, he's got this little Lego model of a car, and it's not in a box or anything. He's just built the Lego model. He just sits it on his desk. I took a photo of the Lego model, and I was just like, oh, it's this Lego set. This is where you buy it from. This is how much. I was like, oh my God. Yeah, it's like I didn't even have to have the packaging or anything. Like I was just pointing it at everything. It's so good. So they're definitely focusing their AI efforts on being able to search. I actually pointed it. It's so good. Like I can see out my window a couple of trees. I pointed it out at the tree, took a photo, and it took like maybe 5 to 10 seconds. And I was like, oh, by the way, it's this type of tree, if you're wondering. Yeah, it's like, holy smokes, that is awesome. That is so cool. So I'm having a good time, but it makes sense. I mean, it's got the Tensor 2 chip in. They're focused on AI. It's clearly showing. Marquez said it is the smartest smartphone. Other smartphones beat it on hardware, but it is the smartest smartphone, and I am not disagreeing so far.
Yeah.
But anyway, that was a bit of a tangent. That's basically all I had to say for Google. They noted cloud revenue growth was above average. They didn't talk about how it's losing more money now. They noted that Google Workspace now has over 8 million business customers worldwide, which I thought was very interesting. I am one of them. Do you use Google Workspace as well?
Yeah, it's great.
There you go. Yeah, very handy. They also noted greater focus on higher growth areas from now on and a pause on all the other stuff, which makes sense given the economic environment. They also said they're going to significantly lower their headcount for Q4.
Right. Wow.
So there you go.
That's kind of crazy because
I think they're at what are they at? 186,000 employees, I think.
Insane.
Oh, I don't want to get that wrong. Where is it? It's right at the top. It is 186,779 employees at the end of Q3.
It's crazy because
it's a lot of people.
All these tech companies have just hired so many people over the last 2 or 3 years.
They have, haven't they?
So it's kind of odd for them now to just suddenly be cutting heaps of them. But it's just very weird because Meta's in the same position. I'll talk about. Actually, I don't know if I mentioned their headcount here, but. Yeah, we'll definitely.
But no, that was the case, wasn't it? Like, I remember talking about Meta headcount, and we were saying, they're bolstering their security and privacy division with extra staff, and it's going to cost a couple $2 billion extra every quarter or whatever. And we were, at the time, because times were good, we were like, it's fine, it's fine, whatever.
Go for it. 30%
and now they're like, oh my God. Yeah. And now we're like, oh my God, there's so many people working here. We need to get rid of some. But yeah, no, that's all I had to say for Google. So do you want to take us through Meta?
Yeah. I'll take us through Meta. As I kind of mentioned earlier, the stock was an absolute bloodbath. It was last night for us here, but for you guys a couple of days ago. The stock was down during the day before earnings came out, 6%. And then it is now down another 20% in after hours, I think, or right around 20% down, which is a big because they were going down very heavily during the day. And then after hours, they got absolutely destroyed. And I just had a look from their 2021 peak. They're down, I think, about 75% or 73% or something like that, which is crazy. I definitely dodged the bullet on that one.
Smokes. Your You're not in Meta anymore.
No,
we can talk about this off air if you like.
No, it's okay. I got rid of them in I think it was like early March or late February or something like that. Okay. So I definitely took some of the decline that happened through 2020 or late 2021, but fortunately I've kind of dodged the last 6 months, which has been pretty significant. It was really just because.
Do you mind if I ask you what your reasons were behind like deciding to kind of move on from Meta?
Yeah, I mean, in hindsight, I probably should have sold them kind of a lot earlier. There's kind of a few different reasons. I think I can't model the metaverse, so they're spending a lot of money on the metaverse, and I can't really. There's no visibility on cash flow really at all. And then when it comes to their core business, which I think you could have previously modeled reasonably, there's a lot of uncertainty. I think the biggest thing is probably the iOS tracking change. The fact that Facebook, and I've spoken about this in a couple of videos if people want kind of more my deeper thoughts on this on YouTube, but essentially Facebook relies on a lot of third-party tracking and a lot of third-party data, and iOS kind of introduced this change where people could easily opt out of that. Android is probably going to be implementing something similar. And compared to Google, they're a lot more exposed to those changes. Google collects a lot of its data itself. It has search, YouTube, has Android, the Play Store. It has all of this internal data that they can use, so they don't have to rely on third-party data. So that was probably one of the biggest factors that led to me thinking maybe I can't clearly see what the future cash flows of even their advertising business would be. And there's other things such as the shift towards lower monetizing ads like Reels and that sort of thing. But yeah,
right. Interesting.
So yeah, and we'll see. I mean, I never want to see a business do poorly, and I actually am very hopeful on their metaverse ambitions because I think it's super exciting. I hope that he continues to, especially as an outsider now, that he continues to spend a lot of money and develop these incredible technologies because I think it's cool. I'm definitely not anti the business or anything like that. I think it's a great business, but in terms of the quarter, really they just missed expectations so bad. Like it was a big miss.
Really?
Yeah, there was actually quite a bit of commentary on the fact that the miss was so bad that they probably should have done like a pre-announcement. Sometimes companies adjust their guidance before the quarter ends, kind of because they just know they're going to miss so
Soften
badly.
The blow.
Yeah, exactly. Like the miss is so bad that they can't even wait to earnings. They have to pad it out. But they didn't do that, and it was a bit of a disaster for the stock. So revenue came in at $27.7 billion for the quarter, down 4% year over year. And there's quite a few factors that kind of drove that. They spoke about some of them in the press release, and then they spoke about in more detail on the conference call, which again, the same as you, I only listened to kind of half of Facebook's conference call.
Yeah.
In terms of their advertising business, which is pretty much their business, ad impressions were up 17%, but average price per ad was down 18%. So pretty much different numbers, but same as Google. The number of ads going up, or the ad placements, and the price per ad going down. One of the drivers of that was there's more users on the apps. So in terms of the family of apps, all of their basket of social apps, they now have 3.71 billion monthly active users and 2.93 billion daily active users, which was up 4% year over year. So still getting some growth out of that, but it's definitely slowing down now, reaching somewhat of a peak, I would imagine. And then Facebook, which is just the Facebook platform and Messenger, had 2.96 billion monthly active users and 1.98 billion daily active users, which was up 2 to 3% year over year. So their growth in that is pretty much stalled to a halt. But as we always say, it's kind of surprising they're still able to get any growth out of those figures.
Yeah. Yeah.
They mentioned a 2% foreign exchange impact. So a little bit of an impact was against Forex, but not as much as I would expect considering their revenue was down 4%. So clearly there's kind of other things that are having bigger impacts on why they're no longer growing. And they mentioned a couple of those things on the conference call. More lower priced ads on Reels as that drives more engagement than stories and feed. So that's kind of, I'm sure, Google's probably going through a similar thing with Shorts, which is people are spending more time on this short form content, and it doesn't monetize as well, and they haven't ramped up monetization there yet. So it's kind of just, as Zuckerberg said, displacing revenue from previous ads where they could get more revenue. They didn't mention this, but I'm just assuming that the less effectiveness of their ads due to the iOS change is also probably having an effect on how much advertisers are willing to pay for ads. I think the impact was $10 billion last year, they said. We don't know what that impact will be by the end of this year, but hopefully at the end of the year, they'll give us a full idea of what they think that figure would be. And then also they did mention the short-term decline in online shopping and ad budgets, which of course is probably affecting Google as well. So yeah.
Right. Interesting.
Yeah, and then
I don't know. Sorry, I think we're on quite a delay. I think our internet is being a little bit dodgy at the moment, so I'm just kind of letting you talk because I've noticed by like when I finish talking, it takes you like a few seconds before you. So I'm just shutting up. But no, that's interesting. Interesting. Only a 2% foreign exchange impact. I would have thought it'd be more than that. But yeah. Anyway, sorry, continue.
Yeah, that's okay. So I mean, they're clearly feeling. I would imagine there's probably a large effect of some of the short-term businesses pulling back some of their ad budget. It's just difficult to see what's kind of representing fundamental shifts in maybe how consumers use Facebook's products and whether they can run ads effectively in those ways, and what is just the short-term macro problems that are kind of hitting every kind of advertising business. They're also probably facing some competition, I would imagine, from TikTok and YouTube Shorts, although their impressions were up. So that's kind of it was one positive thing. It is difficult, even though impressions were up, to imagine or to figure out how much time people are spending on different apps. We don't really have all that much clarity on that. Fortunately, in kind of the TV space, we can see we have places like Nielsen, which tracks how people are spending their time on cable and YouTube and that sort of thing. But when it comes to mobile apps and that sort of thing, we don't have any data. We'd be relying on.
I was just going to say, it's interesting how, like, you remember when Snapchat came out with stories and then essentially all the big dogs nicked it. Well, by the big dogs, I mean like Facebook and Instagram, which are the same thing. Yeah. It's interesting now that there's Facebook with Instagram Reels, there's TikTok, and then there's YouTube Shorts. It's interesting that all three of these businesses are large businesses, and they're now all focusing on the exact same product. So it's very difficult. I think it's very, very difficult to see who's going to win, or even if there will be a winner in this space. Does it come down to, like, will there be an environment where we will just have three different apps? But then it's just like, where are your friends at? Because all the content will be posted across all three. So you're still going to, like, the same funny TikTok's going to be on Instagram Reel. It's going to be so hard because there's three, instead of like a small business making something quirky and fun and then a big business copying it and then squashing Snapchat, you know, it's now like we've got three big businesses that are all trying to do the exact same thing. So it's like, I wonder if there is one winner out of that, or whether it's just like all three of them. And I don't. It's going to be very, very difficult to see. I don't really know. Yeah. Do you have any ideas on that?
I think there could probably be two winners, because I think personally, my horse in this race now is YouTube, just because they have the ad split. What am I trying to say?
That's true. The content creators will go to YouTube because they are going to get more.
Yeah, they get the revenue split,
short form content.
Yeah, but with that said, I think YouTube over time has continued the production quality of content on YouTube has just consistently increased. So I think Shorts could probably represent more of short-term content or short-form content that relates to that higher kind of high production quality content that are in full-form YouTube videos, whereas maybe Reels or TikTok can still sit as being more casual for people, just, you know, more like stories where people are just sharing quick form things with their friends. That kind of stuff seems to fit more organically on either TikTok or Reels than it does in YouTube, where if someone's posting that kind of thing, then they can't really link to a YouTube channel where they're doing a similar thing. So, but who knows? You're right. It's an open field, and we'll kind of have to see.
It is
who gets there first. But I'm sure money will probably drive a significant amount of that industry. So YouTube's decision
seems
to
make the world go round, doesn't it?
It does. So YouTube was smart to make that change. In terms of reality labs, so their metaverse quest into the unknown. No pun intended. The revenue was $285 million. Down 49% year over year. So that's not good.
Oof.
But no. I mean, it is very early stage. So of course their revenues go up and down all the time, but they do have kind of a suite of products now. So you would hope that there would be some floor on their revenue of people consistently buying their VR products, but that market isn't quite there yet. We don't really get any insight onto unit sales or anything. I think Zuckerberg wants to sell 1 billion VR headsets. I think that's what his kind of long-term Polaris Star kind of goal is. But in a couple of interviews, he's been asked how many he sold, and he has not answered, although I think some estimates were like 10 million units, but he didn't kind of give any clarity on whether that's even close to how many they've actually sold.
More cars than Rivian have delivered.
That is very likely. Assuming they've sold a headset, then yes, that would be correct. No,
oh dear. Yeah, it is interesting. It's so early on, but geez, revenue down 49% year over year. But there's also that stat where it was like sometime last year, I think, or maybe it was last year, that like Quest 2s outsold Xboxes. Maybe that was because Xboxes were choked with the supply chain chip shortage, and I don't know. Maybe Meta took advantage of that better, but yeah, it is weird. Yeah, well, they're spending a lot of money on it, so I hope it pays off for them. As a shareholder, I hope it pays off.
Yeah, well, so they just released the new kind of Pro headset, which is $1,500 US. So I mean, you would expect, and we haven't seen that in a full quarter yet. So actually, I'm not even sure if it's even out yet. I think you can only pre-order. So next quarter we'll see.
Probably, yeah.
Next quarter and next year we'll see how many sales they do of that device. Because I mean, if they sell 1 million, they probably won't do this. But if they sold 1 million units of that device, it's $1.5 billion in revenue. So we will see a meaningful change in that Reality Labs revenue figure if they sell a meaningful amount of devices. If they sell, 100,000 devices, then, I mean, even 100,000 devices, 150 million, so in revenue. So, that would be a meaningful change. So we'll see. If they sell no devices, then we'll know about it because their revenue won't move. But we'll see. It's tough to sell a $1,500 device in a high inflation environment when people really don't need to spend more time in the metaverse.
Yeah, maybe it's like maybe some architects will go for it, that kind of thing. But
professionals,
there's not too many situations at the moment where a $1,500 or what was it, $1,500 headset is or 11. How much was it? $1,100, $1,500,
$1,500 US. Yeah,
1,500. Yeah. There's not too many situations where that is worth the value. It's not value for money at that point for too many people. There are some situations, maybe some people just be boss VR gamers with it on or something, but it's just not it's an experiment at the moment.
Yeah, exactly. Yeah. They've now spent $9.4 billion in 3 quarters this year on VR. So they're full steam ahead pumping at the $10 billion a year they said they were going to spend. They're going to spend more than 10 this year, probably closer to 12 on their metaverse journey. And then in terms of costs, we're really seeing that R&D costs were up 50% year over year. And then everything else was up about 10 to 12%. So even if you exclude R&D for the metaverse, I mean, everything else up 10 to 12% in a year where revenue's down 4% is not great. And it had a pretty meaningful impact on profit, which came in at $4.4 billion, down 52% year over year.
So what do you reckon would happen to the stock right now if Mark came out and said, "Look, guys, we were so excited about the metaverse, but we've actually decided that that's not the future. So we're going to stop all of our spending in this area and we're just going to focus on advertising." You reckon the stock goes up or down if he says that?
The stock goes up. 100% the stock goes up. There's no doubt
I reckon
about
the stock goes up as well.
The stock 100% goes up. But where it goes long term, I don't know. I mean,
yeah, that's true. Maybe this is necessary for the long term.
Yeah, but that's the thing. I mean, like, who even knows what the cash flows of this business will be? I mean, as I said, even a million, if you're selling 10 million devices, I mean, that's still 15 billion in revenue. It's a drop in the bucket of their advertising business. So,
yeah, I remember listening to the Monish Pabrai interview, and he said, just don't think about the cash flow of Reality Labs. Just imagine that it's just like an extra $10 billion cost each year, and just factor that in, and just, instead of trying to guess, because you could come to some wacky conclusions trying to think, I think the metaverse is the next big thing. They're going to be making 150 billion in annual revenue from metaverse. Like, you just don't know that. So Monish's thoughts that if you're looking at Meta, just don't forget about Reality Labs, but assume it's going to eat $10 billion a year for the next 10 years.
Yeah.
And then just base your entire valuation off of advertising.
Yeah, that's exactly how I used to value Meta. Just don't even think about any benefit. I just assume they just burn 10 million a year, and Zuckerberg has some fun trying to make some headsets and some glasses, and then he gives up.
Wow, so cool! All right, that was fun. What are we doing now? Oh, that's right, advertising.
Well, the rest of the company can get on with actually what makes money. He can play with his headsets.
Yeah. No, that's it. But yeah, obviously there's still headwinds in the advertising space as well, with the iOS crackdown and Google crackdown. But it'll be interesting to see. I mean, I don't think that destroys their business. I think it makes the targeting a little bit harder, but I still advertisers still want to use Meta. I mean, they can still target people very, very effectively, even if they can't. Even if they go in more blind than they currently are, they can still, and they're putting in the effort to get the AI up to speed to be less reliant on data to be able to serve good ads. So
I mean, you can't forget about.
I'm a little bit more of the opposite of what you think. So I'm still a shareholder, whereas you've moved on.
Right.
So I just come to, I guess, a little bit of a different conclusion.
Yeah, I mean, obviously, no one can forget they have a huge amount of engagement of the world on their platform, and that's a huge margin of safety. So, even if I'm saying there's less visibility on their future cash flows, I'm not saying that means that the company is going to zero for sure. I mean, they have a huge flaw on their revenue side of their business, which is the fact that they have so much engagement on their social platforms, and advertisers want to get in front of people, and that's that's not definitely not to be forgotten in the discussion around Meta.
I also think there's a lot of potential for future. Like, there's still so much about Meta that isn't monetized, or not monetized to its I don't want to say full potential, because you don't want to just barrage ads and just make it a bad experience. But for example, WhatsApp isn't monetized at all, and it's got however many billions of users and stuff. I mean, maybe you can't really generate that much ad revenue from a platform like that, because it's end-to-end encryption. So you kind of just throwing your line out there, kind of not knowing what's even in the lake kind of thing. But I mean, if times got tough, they could definitely push hard and turn on some more advertising taps. They could definitely just whoosh. They've got so much potential still in a lot of different apps. And I was talking to Divya Narendra about that. He's super bullish on WhatsApp because it's not even monetized yet. In any way, shape or form. He was also talking about maybe it's not a traditional advertising model. Maybe it's more of an advertising model about directly connecting businesses, not just hey, buy our product, but directly connecting businesses to clients. Maybe there's some sort of service there. Yeah. Anyway.
Yeah. Well, on that, I mean, one partnership that they have now with Salesforce, which is the customer relationships manager, is they have a partnership where Salesforce directs Salesforce customers to use WhatsApp to communicate with customers. So that's a business to business way that WhatsApp has this huge network, and they can use it as the kind of infrastructure to connect customers for more for other kinds of businesses, like a Salesforce, which is kind of managing businesses, customers, and that sort of thing. So.
There's a lot of potential. But anyway, sorry, I've probably was there anything else we had to add to? Yeah,
that was it.
Okay,
that's all we got. So it was a rough. rough for the two advertising giants this quarter.
It was.
No good.
It was. All right. What should we talk about next? What did I put in? I forgot. Oh, this is a very quick one. I'll go through this. Mobileye shares closed up more than 37% in their stock market debut on Wednesday after the maker of technology for self-driving cars was spun out of Intel. Mobileye was publicly traded before Intel bought the Israeli company in 2017 for $15.3 billion. At its IPO price of $21, Mobileye was valued at just $17 billion, resulting in minimal gains for Intel thus far. But the stock trading under the ticker MBLY rose to $27.85 on Wednesday, representing a 37% gain. Wow. So that's gone. They've put that back on the market, and that's gone pop in one day. Wow. However, Intel will retain control of Mobileye and hold over 750 million shares of Class B stock, which has 10 times the voting power of Class A stock. The IPO raised $861 million, and the move to list Mobileye on the Nasdaq is part of Intel's broader strategy to turn around its core semiconductor business, which has lagged behind rivals like AMD and Nvidia in recent years. Intel said it would use some funds from the Mobileye listing to build more chip factories as it embarks on a capital-intensive process to become a foundry for other chip makers. There's not too much, apart from the headline that it popped more than 37%, which is quite interesting. And I guess Intel hasn't really captured too much of that themselves. I actually just wanted to put this in because Mobileye is a name I have not heard in years. And the reason I had heard it before is that they actually delivered the earliest versions of autopilot for Tesla. So Tesla Autopilot was actually initially created by, or the auto lane keeper. I think they still called it Autopilot back in the very earliest versions. It was actually created by Mobileye. And then sure enough, Elon was just like, this is not getting good enough, fast enough. He kicked out Mobileye and then they brought it all in-house and have gone from there. But that was, a little bit interesting bit of history.
Yeah. I don't know much about the kind of different competitors in this space. Obviously, there's quite a lot of vehicles that have basic AI autopilot capabilities, like keeping in the lane and that sort of thing.
A lot of them do now, yeah.
Yeah, so it will be interesting to kind of see how these kind of different competitors move over time. But yeah, you would imagine Tesla would still have a huge advantage with how many people are using their beta and how much data they're drawing. And it is kind of you would imagine it's a bit of a flywheel effect where if they're in front, they have more data, kind of like Google. If they have more people searching on their algorithm, they have more data coming in, so their algorithm gets exponentially better, and it's when it kind of takes all in that respect. But we'll see. I don't know. Interesting.
Yeah, we shall see. Anyway, that's all I had for that. I just wanted to chuck that in because it's a name I'd not heard in a while. What have you got to talk about, Hamish?
Yeah, I'll take us through Australian inflation. Our internet's I think it's my internet is really struggling today. There's a bit of a lag,
I think we might have to get. Oh my gosh, yeah, the internet is terrible. We might have to get Andrew to clean up this podcast episode a little bit. So we apologize if there's any kind of issues in the audio experience this week because our internet is very choppy. Yeah. And I think by the time each of us end talking, it's taking a good 2 or 3 seconds before the other person actually starts. So we might have to clean it up. Anyway, Hamish, take us through Australian inflation and I'll just sit here and shut up.
Yeah, so Australian inflation figures came in and we only get this once a quarter. So this is the Q3 results. And as I said, I think starting next year, Australia will be doing monthly like the US and the UK. So we'll get more regular updates next year, which will be nice. But we're stuck with the quarterly in Australia for now. The year-over-year figure came in much higher than the previous quarter, which was to be expected. Came in at 7.3% year-over-year to the year ended September. So it is actually a comparable figure to the latest monthly figure from the US and the UK, if that makes sense. It's still a year-over-year figure, even though we only get it once per quarter. The quarterly increase was 1.8%, which is pretty significant, kind of a 0.6% monthly increase on average through that period. And it's the highest annual inflation since 1990. So we must have had some really crazy inflation in the 80s if we're only back at 90.
Yeah, true.
Or either that or I honestly haven't looked too far back at Australia's inflation history, so I can't remember if maybe we had a particularly large spike in the 90s as well, unlike some other countries. But we're not too far off the US now, which was at 8.2%. So you might remember that the US has kind of seen annual inflation kind of tick down a little bit. Ours is still going full force up.
It's on the up. Woohoo!
Exactly.
Just keep riding that wave. Let's go.
Yeah.
Up and to the right. That's what we want, right?
Yeah.
Oh wait,
it's exactly what we want.
Yeah, I think that's what we say as investors, right?
Yeah. So unfortunately, it kind of looks like we were a little bit braced from inflation, but now it kind of appears like we were just a little bit delayed. So that's unfortunate. Treasurer Jim Chambers said, whether it's food, whether it's electricity, whether it's rent, inflation is public enemy number one. And then he said, inflation is the dragon we need to slay. I think he's been watching a bit too much Game of Thrones, to be honest. I don't know what that is. Inflation is the dragon we need to slay. So, I mean, okay.
Dear.
I mean, okay,
right.
Okay, mate.
Call him Jim Targaryen or whatever his name is.
Yeah, the Iron Throne. The biggest driver of inflation in Australia is actually not energy. Energy is cooled off, as has been the case with a number of places around the world. It's actually also not food either. It's housing. So overall housing is up 10.1% year over year, but up 3.2% for the quarter, which is really fast for a quarterly rate. The ABS had to say this on housing: high levels of building construction activity and ongoing shortages of labor and materials continue to drive higher prices for new dwellings. The cost of buying or building a new home is up 20% year over year. So new homes is where there's quite a lot of expense. In terms of food's also still a big contributor. Fruit and vegetables are up 16.2% year over year. And we also had dairy up 12% and bread up 10%. So, as I mentioned, the most important part about inflation is breakfast is getting more expensive, guys. Your eggs, your milk, your bread.
Damn it. The best meal of the day, ruined.
Yeah. It's
Avo toast has gone up astronomically.
Yeah, exactly. The fruit and veg is up, so it's probably Avo. Yeah, exactly right. Tomato, if you like a bit of tomatoes, mushrooms, that sort of thing. So, yeah, it's you can pick. Well, I mean, I don't really eat that much breakfast, so this has been kind of good for me.
Oh, there you go. You save money. Yeah, Everyone else is going backwards eating breakfast, and you're just saying, yeah, whatever.
Exactly. What inflation?
Comparatively, I'm ahead now.
Yeah.
Anyway, I'm just gonna keep quiet and let you power through this because the internet's getting really bad. So I actually am just gonna shut up and let you power through this. Sorry, guys.
Okay. It's all right. Apologies for that, guys. Automotive fuel fell for the first time in 2 years. So had its first quarterly fall in 2 years, which is pretty significant. It was down 4.3% quarter over quarter, but is still up 18% year over year. So similar story to what we've spoken about with the US and the UK. Year over year still very high, but more recently cooling off somewhat, at least. Really interesting kind of analysis that I hadn't seen from the US or the UK actually was that the ABS provided an analysis of discretionary and non-discretionary inflation. So kind of comparing, instead of just looking by category, kind of segmenting categories into things that are discretionary, so not necessary purchases, things people can kind of cut back on, or non-discretionary, which are things like food or fuel or housing, where people aren't really going to cut back, even if they get more expensive. They're necessary expenditures. So in the non-discretionary category, they put fuel, food, housing, utilities, and a couple of other categories. In discretionary, they put things such as recreation, clothing, furnishings, and household equipment. Interestingly, discretionary, so non-necessary inflation was 5.5% year over year. Non-discretionary, so necessary things, was 8.4% year over year, which is really important because it kind of feeds into a question we had a couple of weeks ago, which was about the energy side of things and whether interest rates rises can actually curb those expenditures, because people don't really spend that much less on on energy when prices go up. They kind of just eat the cost because you can, put your aircon or heater on less, but more or less your energy bill is just, your energy usage is going to stay kind of similar, or your fuel usage, for example, might stay fairly similar, which kind of demonstrates that, yes, interest rate hikes probably can cool some of those discretionary inflation categories, but clearly there's some supply side issues that need to be resolved, and a lot of that is the very tight labor market and the rising labor costs for a lot of businesses. The only thing I would say kind of as a caveat to this is they didn't segment purely based on discretionary and non-discretionary. They just put different categories in those two baskets. So things like food, yes, that's definitely, as an overall category, non-discretionary. People can't not eat, obviously. But within food, there is quite a bit of room people have for how they're spending money. So whether they're going out less, whether they're doing, buying different types of foods, substituting premium goods for home brand goods. So there's some movement in that really high non-discretionary inflation figure that can come off, I think, with interest rate hikes. But it does give you a picture of, this isn't as simple as demand is driving inflation, rise interest rates, demand slows down, we're all good. There's some supply side issues that are baked into quite a bit of inflation here in the US and the UK that interest rates might not do that much to resolve. That's kind of the situation with inflation in Australia at the moment. And as I said, we'll get another quarterly update at the beginning of next year. And then hopefully we'll get our monthly data so we can keep a closer eye on inflation going forward.
Yeah, that is a very interesting way to break it down as a discretionary and non-discretionary inflation rate. I've never really thought about it more like that. But 8.4% non-discretionary inflation is insane.
Yeah.
Like that really gives you a sense of how much people's budgets are being tightened, I guess. They've just got 8.4% less to spend because they have to spend it on these discretionary. Yes, that's a pretty crazy way to think about it.
Yeah.
I think that's the thing that stood out to me. Sorry guys do we have anything else to say on inflation?
No, that's
just about it. No.
I've got a really important,
cool, but very interesting,
really, really important question that we should answer so we can get some Q&A in. Leave your questions on the latest episode on YouTube or on Spotify if you have one. Really important. Hi Brandon, what hair product are you investing in? Looking sharp. So
hang on. Here you are, everybody. This is called the Boxer Bollocks. You see that? Boxer Bollocks. It is a texture paste. It is 90 grams or 3.1 ounces. It is a nice matte finish. It's quite a nice texture clay. It holds the hair. It's quite a strong hold. I have quite thick hair, so definitely need that strength behind the grip, but you also don't want it to be too gel-like and it turns your hair crusty. So I can recommend Boxer Bollocks. And if you use my referral link down
what you guys don't see, you don't see the makeup team come in just before the podcast. There's like three people that come in and Brandon's all classic like movie actor yelling at everybody to make sure it's all perfect. That's
Do you use hair product? No, you just flick your hair back.
I'm so lazy. I need to get a haircut. I've been saying this for months now, so I will get a haircut sometime soon. Probably not.
Yeah. Probably. Anyway, guys, we're going to wrap it up for today because our internet is shocking right now. So we do apologize. It's normally pretty good. We can have that back and forth banter. But what we'll do is, because we're already running quite overtime, we'll save your questions for next week. And we do actually now have quite a few questions from both Spotify and from YouTube. So we'll go through those next week. But thanks, guys. Thanks very much for tuning in as always this week. Much appreciated. Let us know if, go leave a comment, Meta, Google earnings. Let us know what you think. Any other earnings you guys are thinking of that, like big company earnings that you'd be interested in, let us know as well. Questions, drop it down in the comments of the YouTube version or the question box on Spotify. But apart from that, guys, thank you for watching, and we will hit the road and see you guys next week.
See you guys.